Hard week last week. Major companies reported their earnings like Tesla, Meta, Microsoft. Also, we have earnings from Visa, MasterCard, and of course, the major oil producers. We are going to talk about a couple of them, especially Meta, Tesla, and Microsoft. Also, ASML report their earnings. I made changes to my portfolio. I was kind of right with my predictions for the past week. And we're going to do our predictions for this upcoming week at the end of the episode, as always. So stay tuned, ladies and gentlemen. Welcome to Wealth Down with me, your host, Noble BM. And let's go over the happenings of last week, especially over the earnings of Tesla. By the way, I also integrated now Earnings Hub into my web app, Wealth Down web application, but it's not up and running for use, so you still have to wait on that. So let's talk about the week from 27 to the 31st of January. We closed the month of January on the negative side, and we're going to talk about this. Also, we're going to do our evaluation, our risk assessment for the upcoming week. So let's talk about ASML reported their earnings. They did report better than expected earnings with their revenue up and EPS up over 9.6 and 8.94%. And of course, their stock went up. Over the week, their stock went up roughly 1% over the last week. So when we're talking about ASML, we're actually looking for bookings, and their bookings went up. And it's not a hotel business, but ASML produces lithography machines, which are used for production of chips. So that's why their bookings for future deliveries of their machines are so important. So if they go up, means that they are selling more and more machines. So they reported good earnings and the forecast was good. Now let's talk about Microsoft, which they reported good earnings. Their growth was over 30% year over year, which is pretty good, but that they had a huge jump right after earnings and they never recovered. Now, why is this? There are major concerns that the flop that happened on Monday due to DeepSeek is kind of Microsoft's fault, because they let DeepSeek, or they hosted the R1 model on the Azure platform. And now Sam Altman and of course OpenAI CEO Sam Altman is a bit pissed off, but who can blame Microsoft? They're following the money. Also, if the newer AI models which are going to come out after this announcement of what DeepSeek can do, and let's talk about DeepSeek just a second. So they reported that they trained their model using only $6 million, which nobody believes it. They're actually up there at the 1 billion. If so, DeepSeek is a Chinese company, but they also have a huge fund behind them, and people assume that they provided NVIDIA chips, which are banned under the export bans. So it's kind of, they trained the model using banned chips, and actually the cost was somewhere up there in 1 billion. So always take it with a grain of salt, whatever comes out of China. Now, these are speculations. I don't have any proof of this. I'm only telling you what I'm reading and what I'm hearing. Please do your own research. And as always, none of what you hear here in this video is financial advice. Always consult a financial advisor when you're buying and selling stocks. Now, back to Microsoft. This may be the reason they triggered the sell-off. Also, if you had Microsoft for the entire year, well, you didn't do that well. It's for the year, it's up only 1%. Of course, on the maximum, it's up 1,290%. But for the year, you would go better with just holding the S&P. Now, let's talk about Tesla's earnings, which was one of the weirdest earnings ever. They reported horrible earnings, and then the stock went down and then it went up again, because Elon Musk came out and said they're going to be the best company in the world. People believed him, and that's it. Because due to the fact that it is a car company, they sell cars, that is where the revenue comes from. Elon Musk once again noted that this is not a car company, it is a technology company, and the information that they're gathering from people using their cars and training their own AI will result in autonomous driving and of course robots. People got excited, the stock went up, and then on Friday we had a bit of a sell-off, but we did have a major sell-off in the entire market due to the Trump threats on Friday that they are going to impose starting on Saturday, so the day I'm recording this, tariffs on Mexico and on Canada. Okay, now let's jump to Meta's earnings, which, well, basically it's pretty simple. They have good earnings, they had a pretty good earnings report, better than expected revenue, better than expected EPS. But Mark Zuckerberg came out and said that they are going to become the best AI company of the world with, also, just think about it. The daily active users is 3 billion something. So it's almost half of the population. We're talking just for just a second, almost half of the population is using Meta's applications, whether it's WhatsApp, Facebook, Instagram, Threads, and so on and so on. So they do have a lot of training data. Also, Google has a lot of training data, which has their own AI model, Gemini, which are going to report earnings next week. So that's going to be interesting. Okay, let's close up with the earnings report. We're going to take a quick look at what is expecting to come next week. So we have major players. First of all, Monday, Palantir. I do hold Palantir. We're going to come back to that. And PayPal, Spotify, Pfizer, Ferrari. Maybe we don't care that much about Ferrari. PepsiCo, Merck. And then that's it before the bell on Tuesday. Then after the bell on Tuesday we have the big one, Alphabet reporting earnings, AMD reporting earnings, Chipotle reporting earnings, Snap reporting earnings. Then we got to jump to Wednesday where we have Uber, Disney, Novo Nordisk, Toyota, Emerson, Stanley Black & Decker. This was before the bell. Then after the bell we have Qualcomm, ARM, MicroStrategy reporting earnings. I'm curious to hear what he has to say, that Bitcoin is now staggering. But hey, he's doing good as long as Bitcoin stays up there. Also, we have on Wednesday after the bell Ford reporting earnings. Then on Tuesday, we have Eli Lilly reporting earnings. Then we have Hershey's reporting earnings, Peloton reporting earnings, and Lind reporting earnings, AstraZeneca. Then after the bell, we have Amazon, Pinterest, Cloudflare, Elf, and then on Friday we have nothing. So also Philip Morris. Oh, forgot about Philip Morris before the bell. The exciting week coming up. Now let's talk about the portfolio. So first of all, my portfolio is slightly up. I'm at 162,000 euros, and my portfolio yields currently at 2.57% for the year, which would yield in 3,003 euros a year if I wouldn't touch anything. Now let's talk about, first of all, closed positions. So I would say that this was a mistake. Mercado Libre closed it. United Health closed it. Constellation Software, I would say also a slight mistake, closed it. And I closed my Visa position. So especially about Visa, I closed it before the earnings. They reported excellent earnings. Now this red line is on Friday, and I think that Visa is still going to go up, but it is currently oversold on every aspect of the market. Even if you take a look here, super chart is so far away. Let's take a look at the 5-year. It's so far away from his 200-day moving average that is just perverse to stay into it. But hey, who am I to tell you what to do? I'm just a YouTuber here. But historically speaking, this kind of things happen. They do tend to reverse to their means. So this cannot go on for long. Now, if it would correct back to its least 100-day moving average, I would consider buying back Visa. It's one of the best companies, also one of the dividend kings out there. They're constantly growing their dividends. Excellent company, massively overpriced, in my opinion. So that is why I exited Visa. I took my winnings, and that's it. Now, Constellation Software, well, I would also say that this trades at a pretty high valuation. Exceptionally good company. It's just not breaking out here. I would love to buy it back if it corrects just a tinge and maybe a tinge more. But currently, it's also a pretty dangerous company for me. Now, United Health, I'm not a big fan of United Health, but I don't have to be a fan of the United Health if the fundamentals are there. They are there. But currently, I'm pretty cautious, especially after Robert Kennedy was now chosen as a Secretary of Health. So I'm going to just watch United Health as it evolves. Also, Melly, due to tariffs and due to the fact that it's getting here overbought, I'm going to wait for a better opportunity. It's a good company. Why not? If you have Melly, I'm not Mercado Libre, ticker symbol Melly. I wouldn't say sell it, but I would say be cautious. I sold, took my profits, went on. Let's see what the future holds for Mercado Libre. Now, let's take a look at one quick thing, because Apple also reported earnings, and I want to touch on Apple's earnings because I do hold Apple right now. So it was a trade. I bought Apple here on the 27th, right here, but in the morning. So I'm in Europe. I had a little bit of advantage. I bought Apple here, sold it roughly before the earnings. They reported earnings on the 30th. So sold it right here and took some profit. And why? Exceptional company. I have 2 iPhones right here. I have a Mac right here. I have a PC, recording on PC. My wife has an Apple phone. The company has Apple phones, but they're not growing sales. So 2 factors for holding Apple. You want to be safe. You want to be, actually 3 factors. You want to be, and they both go into the, no, you want to be safe and you want to be liquid. Liquid, what does it mean? Well, mostly you're going to see something like this. Pretty much consolidation, no huge jumps, constant slow growth in Apple because they have amazing products. But you know what? I'm young. I want my portfolio to grow. So I'm looking for companies that they're going to do better than 10% a year, better than 15% if possible. So everything that is above 10% a year, I'm pretty happy with it. But I do search for that 15% return. Now I do not see, even if from this price they're forecasting I would say a medium of 6.93% a year. So I'm never going to take this into consideration. The max, that's just bunkers. I cannot find any reasons for holding Apple, excepting that it is the highest. If you take a look at the heat map, I also have to integrate here a heat map. Even if they are the biggest company in the market and the top in the S&P, I'm not going to hold Apple. So each time somebody buys an S&P 500 index fund, boom, money goes into Apple stock price. Simple as that. Okay, now let's get back here. So I traded Apple, made some profit, sold it. That's it. Oracle, bought and sold a bit of it. I reduced the risk, so that's why it's on the trade. Bought some Oracle, sold some Oracle, took some profits, reduced the risk in Oracle. I don't know what the next week holds, but it's kind of iffy out there. Now let's go into reduced positions. I reduced my position in AbbVie, just a tinge, reduced it to 3.35 or 39% of my portfolio. It had a big jump on its earnings report right here. Took some profits. Why not? And I'm looking to bring it back to roughly 4 or 5% of my portfolio. Also reduced target just a tinge. Target is trying to trigger here sell signal. If this is going to sell off, I'm going to rebuy some target. Not that good of a company, not that much of growth potential here. But what I see in target is first of all the dividends. That's not what I'm buying, exceptionally the company, but it's going to have a rebound, and then I think it's mostly a trade for me. I'm not going to hold target long time. Also, they do have good products, but if a recession would hit, target is going to suffer massively. Now, also reduced my position in Eli Lilly. Had a pretty good week there. Just took some profits and is going to try and trigger here a sell. Who knows? This could rebound next week and could go up, but I reduced my position to 2.29% of my portfolio. And last but not least, Palo Alto Network also impacted on Monday by the DeepSeek sell-off. But let's go to, did I add it? Did I add? Yep. And that's what I did. I added a bunch of positions to my portfolio on Monday due to the sell-off. This is why I sold a couple of companies, took some profit, added back to ASML, increased my position to 7.05% of my portfolio. Then AMD increased it to 6.56% of the portfolio. Now, you can see right here, I'm massively down on AMD. I'm down over almost 18%, but I have big hopes for AMD. Then I added to Procter Gamble, increased my position to 5.83% of my portfolio. Buy some cash. Currently, I'm in a 5.39 position, 5.39, almost there, 5.39% of my portfolio in cash. Would like to increase it to 15% till the end of April. GE Vernova added to it a bit. It had a massive sell-off right here, and boom, back into GE Vernova. Love this company. Also they're entangled now with Chevron, trying to build out some infrastructure there. Pretty high hopes. So GE Vernova at 4.2% of my portfolio. Increased NVIDIA to 3.36% of my portfolio. Also, I want to be perfectly clear here. I want to sell NVIDIA as soon as it generates some profits for me. Currently, I'm down 13.36% in my portfolio. And I do see NVIDIA not peaking here, but growth will slow. I'm curious about the earnings reports, and I'm going to sell it most hopefully before the earnings report. I'm pretty sure that Jason Wang is going to come out in the upcoming week and say something that's going to drive NVIDIA price back up again. Now, last but not least, Palantir. Added to my Palantir position, increasing it to 2.92% of my portfolio, and looking forward to sell it on Monday. Now, let's go to new positions. Opened a position in my, reopened the position in the S&P 500 ETF, which is currently sitting at 3.58% of my portfolio. Why did I do this? Well, it was the sell-off, and it had a bit of correction. So here's the Monday sell-off to that correction. Am I thinking of selling it again? Yes, I do, because I think somewhere in April, maybe after April, there will be even a better opportunity to get back into this position. Now, I'm looking forward for adding massively to the S&P 500. Yeah, this should be somehow as a retirement compensation for me in my good old years. Okay, next up, opened in the, also reduced a bit of a position from sell-off, bought Constellation Energy. It increased, and then on Friday, I was seeing this uncertainty in the market, this uncertainty on the tariffs. I sold just a tinge of it. Maybe it's going to have so I'm currently up 5.23% in my portfolio with Constellation Energy. It has a 2.33% of my portfolio And if it goes down-ish, I would consider buying even more of it. And then last but not least, Broadcom, new position. Also bought it on Monday, sold a bit off on Friday, took some profits there. It's currently at the 65% of my portfolio, and looking forward to add to this company. I do see it as a major competitor to NVIDIA. Okay, so with this being said, that's it for the portfolio. Now let's do a little bit of risk assessment for the market. By the way, last week I said it had a 30% risk in the market, and then Monday happened, which was kind of a black swan event, not that big of a black swan event. And of course, I was wrong for Monday, right for the rest of the week, and wrong for Friday. And let's get into this, because January ended on negative, which means that the entire year will end negative. Now, this is just mumbo jumbo, but statistically speaking, if January ends on the positive, actually three things. If the first 5 trading days of January, if January ends, and third thing, if these three things end positively, the entire year will be positive. If January ends on positive, then it's going to be positive-ish, so low returns, but still plus. And if it ends negative, then it's going to impact negatively the market. So I would say we are trending here in a high risk in the markets for the next week. Who knows? Now, the S&P 500 is currently on a sell sell, which is a high risk for me. The MACD is pretty much on the medium range, so we are at 54 from 50. So we're going to treat this at medium risk in the market. Now, as for economic events, we have on Monday we have nothing. Actually, we do have that was the 27th. Now, the 3rd of February, Monday, we have ISM manufacturing PMI. This is going to be interesting because the last report was that not from ISM, but last week I rather reported the US is currently exporting more than they're importing. It's also producing more. So we're also going to take a look at the JOLTS report. It's going to be interesting. ISM services PMI also on Wednesday. So once again, manufacturing is on Monday. JOLTS report is on Tuesday. Wednesday, we have the ISM services, which the US is mostly 80% or something like services. So the manufacturing is only 20%. The rest is services. Then on Thursday, we have nothing. And on Friday, we have non-farm payrolls, unemployment rate, which is going to be a big one, and the Michigan consumer sentiment. Now, I'm curious if the Fed already had these results. And they hold, last week also was Fed meeting. They didn't cut, but the ECB, the European Central Bank, cut. This is why my portfolio is currently yielding only 2.75% on my cash. Okay, let's go back to our risk calculator here, to our risk report. So we have pretty interesting economic events next week. I'm going to increase this to a high risk in the market, or treat it as a higher risk. We still have earnings, and one interesting thing. So we are now in February. February tends traditionally to be a weaker month of the year. Almost nothing happens in February, but buybacks windows are open for all of the companies that reported earnings. So we could see the start of buybacks coming back because, for example, NVIDIA cannot buy back its stock until its earnings. Now, this should give the market a bit of a boost, but I don't know if companies already start buying. So just the window is open. That doesn't mean that next day, on Monday, they are going to start to buy back their shares. So buyback, I'm going to leave this at a medium risk. Now, somewhere at the end of February, I would lower the risk for this because they're actually helping the market. So what we're doing here is calculating how risky is it to invest in the market next week. I was obviously wrong last week, but who saw that with the DeepSeek? If DeepSeek wouldn't happen, then we would have a pretty green market, or it would end at green, and I would give this week a thumbs up also the next week. But the next week does look a little bit risky for me. So let me hear what you think. Hope you enjoyed this. Leave your thoughts in the comment section below. Let me hear your trades. Be curious to hear what you think about the companies that are going to report earnings next week. What do you think about Tesla's earnings? That was a strange, weird one. Company reporting devastating earnings. The stock is up. So fundamentals don't matter at all. Ladies and gentlemen, I'm Noah BM, wishing you a lovely week. Stay safe out there. Catch you next time. Bye-bye.